Hello, everybody. Welcome to the session. Give you all a minute to jump in here, get settled, and then we will kick it over pretty soon to Dave. All righty. That was your 15-second settling time. Hopefully everybody's ready. Dave, super excited to have you. So Dave Boyce is a serial entrepreneur turned investor, author, and student of the world. So Dave has helped and build and sell 5 SaaS companies. And so a lot of past success to prove to where he is today. Dave's expertise as an investor is early stage company formation, and product-led growth, especially in B2B SaaS. So he served on the board of Forrester since 2017, where he both contributes and benefits from Forrester's point of view on the future of disruptive technologies. He also teaches 2 courses in BYU's Marriott School MBA curriculum, one on B2B sales and marketing, another on career building, and he is a popular guest at Harvard Business School. So with all of that amazing intro, Dave, awesome to have you here and very excited for your presentation.
Thank you so much, Breezy. Yeah, there's a little bit of success along the way and also lots and lots of failure. So that's what you get when you put yourself in the arena over and over again. Those are all hard-won lessons, but, I'm excited to get started here. Should we just kick off?
Yeah, let's jump right in.
Ready to go. Feel free to interrupt me anytime you want if I'm babbling on, but I fundamentally believe that this is the most exciting time in the history of the world to build a recurring revenue business. It is amazing. Like, we've been at SaaS, we've had the SaaS business model for 2 decades now, and we've had the product-led growth model for almost a decade, and we have seen a ton. You've said in the intro, student of the world. Like, if we're being good students of the world, we have seen a ton of success and a ton of failure. Ben Franklin said, experience holds a dear school for those who will learn and no other. But we are not fools. We will learn, we can learn, and we should learn from the success patterns of others. So what we're going to talk about today are not theories. This is not stuff that might work or that seems like a good idea. These are literally proven patterns of success from hundreds of companies that have gone before and have built recurring revenue businesses that have succeeded. And we're going to talk about a concept called stackable revenue. The cool thing about this time right now is not only are the patterns of success there, but financial backing is there to back the entrepreneurs who understand and follow those patterns. We're seeing 10, 20, 30, 50, 100 times multiples on revenues to back entrepreneurs who want to go build exciting recurring revenue businesses based on these principles. So let's kick it off. Product-led growth this is one definition, is a go-to-market strategy that relies on your product as the main vehicle to acquire, activate, and retain customers. So your product is a member of the revenue team. Your product's not just something that you sell. It's not just something that your customers use, but it literally is a member of the revenue team. It carries on its shoulders some of the job of actually acquiring customers, helping those customers unpack the product and get value out of the product and retain and sustain value creation and impact on the product. And we believe that the future of software belongs to product-led growth. Having seen a few innings in this game, as Breezy said in the intro, I fundamentally believe the future of software belongs to product-led growth. And I have conversations with CEOs all the time who have raised their first round of funding, and now they are, ready to scale, right? And so we'll draw something on the whiteboard that looks something like this. Okay, you just bought yourself with X million dollars. You just bought yourself some time on the X-axis, and we're going to do some thing on the Y-axis. What is that thing? And CEOs inevitably say ARR. I'm going to grow ARR, annual recurring revenue, over time, and I'm going to hit some target. They might say a number, $2 million, $5 million. And I say, okay, good. We want annual recurring revenue. We do want to build that over time, and we are value based on growth. So if I hit that, have I succeeded? And CEOs generally think I'm asking a trick question, which I am. And they're like, yeah. I'm like, well, not necessarily. I can think of a version where you might hit $2 million of ARR in the prescribed time that you've given yourself to hit that $2 million of ARR, and I still wouldn't want to invest in your company. Tell me more. Well, what if you sold 2 customers for $1 million each? I'm not interested. I would rather see 20 customers for $100,000 each, or even better, 200 customers for $10,000 each. Those are very different businesses. I could go sell $1 million customer right now on a good demo. That doesn't mean the customer is going to succeed, doesn't mean the customer is going to get impact, doesn't mean this customer is going to renew or come back, and doesn't mean that I've figured out how to get the next customer and the next customer and the next customer. What it means is I'm a good salesperson. Whereas if I've sold 200 customers for $10,000 each, that says something about the machinery that I built. That says something about the stackability. That's what we're going to talk about today, is how to do that. So if we consider we want to stack this revenue, we want to get that y-axis stacked to the moon. And we're going to stack kind of units of revenue, which is a really antiseptic way of talking about it. But let's just talk about a stackable unit that is the customer and all the economics associated with the customer and everything I had to do to acquire and retain that customer. That will be a stackable unit. And then consider on this page which of these 2 stacks we think we can stack higher. Clearly, it's the stack on the right. Stack on the left is going to collapse under its own weight in not too many more additions because the shapes are not uniform. And the characteristic of these units that makes them stackable is the consistency of their edges. If I've got the same shape with the same edges every time, I can figure out how to stack those to the moon. Well, we're going to call the horizontal edges for this analogy process. What do I do to get the customer? What do I do to help the customer succeed? And what do I do to retain the customer? I want that process to be the same every single time, as opposed to looking different every single time. Well, what reasonable person wouldn't want the left versus the right? Turns out smart, reasonable managers make decisions every day that look more like the right. And you'll hear it in language that sounds very logical, like, we are here to meet the customer's needs. What would we not do to acquire a customer? What would we not do to retain a customer? And those are good, reasonable sentiments, but they are not stackable. So when I am doing processes that color outside the lines, I need to do those for one reason and one reason only, to test them out, to see if they can go into my formula, to where I would do that every time. If yes, then I'm going to incorporate it into a very consistent set of processes. If no, I'm not going to do it anymore. But very often, in the service of hitting that $2 million on the y-axis, I'm going to do it this way this time, and that way that time, and this other way this other time. And that is not stackable. So that's our process. If our horizontal edges on these stackable units are process, we'll call our vertical unit, our vertical edges, unit economics. And the unit economics are literally everything that we spend to get and keep a customer, and everything that we get in return, all the revenue that we get in return from that customer. The cumulative lifetime value is often abbreviated as LTV, and the amount that we spend to get a customer is abbreviated as CAC. And if we do an okay job at that, if we do a bad job at that, we're spending more than we're making, and that's terrible. If we're doing an okay job at that, we might have something like we're seeing on this screen, where our lifetime value is 1.6 times what we spent to get a customer. If we're doing a really good job, that's going to be more like 3x. And this is a ratio that that we use to evaluate a SaaS business. We want our unit economics to work out in our favor every time while the customer is seeing impact. Well, hang on a second. How could that get screwed up? Of course I want that. like you said that reasonable people can make different process decisions. I get that. Why would reasonable people make different economics decisions? Well, it's actually kind of the same thing. This revenue at all costs mentality where every single customer needs to be won and or every single customer needs to be saved. If I have aggressive, ambitious, and responsible revenue leaders with aggressive targets, they might employ creativity that results in this sort of a customer acquisition profile this time and that sort of a customer acquisition profile that time and this other sort of customer acquisition profile that other time, or the same thing around retention, or the same thing around expansion, or the same thing around contract terms, or the same thing around the economic structure of a contract. Creativity can be our friend when it's experimental. It could be not our friend when it is when it's chaotic. So I summarize this, and in full attribution to Brian Perks from ZoomInfo, we want to do 100% of the time what works 70% of the time. We want to figure that formula out, and we want to turn the crank on it. We want to do 100% of the time what works 70% of the time. That leads us to product-led growth. What kind of a role would product-led growth play in that kind of a strategy? Well, back to our definition of product as a member of the revenue team who takes on responsibility of acquiring, activating, and retaining customers. If we use product as our experimental vehicle, the product actually can't be creative. We can be creative. We can program an experiment A and experiment B into the product and see which one works better. And then I can lean into the one that works and I can retreat from the one that doesn't work. And I can do that in the interest of acquiring. I can do that in the interest of activating. I can do that in the interest of retaining. And I can tune the model using product as a member of the revenue team to where I get the formulaic kind of revenue acquisition and retention processes and economics dialed. It turns out product is the least forgiving, but the most stable place to do that experimentation. And I want to do that first. If I can do that first, that creates a very stable base layer of revenue. It is the most stackable of the revenue motions because of its consistency. Processes are programmed in. If I'm a product leader, I have run multiple experiments and I have a very hard-won understanding of the processes that do work and they are programmed in. If I could tell my product what to do in this situation, what would I tell it to do? Those are the questions we ask ourselves every day as product leaders. That gets programmed into the successful PLG motion. Same thing with the economics. I've experimented on pricing. I've experimented on bundling. I've experimented on service levels. I've experimented on how to support my customers. And I've got all of my processes and economics programmed into the product to where creativity is programmed and effectiveness is programmed. And this is an unstoppable flywheel. Now, the one thing about it is it's not that impressive. Like I look at what I have attained on the y-axis, it took me a long time to get to something that is kind of not that great. So once we have that working and we've convinced ourselves that we have what we call product market fit and go to market fit, I'm now going to add inside sales. Inside sales is the most programmable of the sales motions. I can scale it really quickly. Inside sales professionals' job is to do what Brian Perks says. Figure out what works and do it 100% of the time. Does it work 100% of the time? No, it works 70% of the time. That's fine. I'm going to move quickly. I'm going to qualify deals in, and I'm going to help customers get value out of my solution quickly. I'm not maximizing for creativity. I'm not trying to win every single deal. I am working on a highly scalable, highly economic sales motion. And when I stack that on top of a product that delivers every single time, not only is the sales team happy and they're hitting their quotas, but the executives are happy because that is a scalable motion on top of a scalable motion. Compounding, exponential growth. I'm starting to see on the y-axis that I like. The third thing that I'm going to add then, having PLG working for me and inside sales working for me, is enterprise sales, sometimes called field sales. That is the icing on top. Now in field sales, we are going to see some creativity. That's what happens. I'm selling 7-figure deals. I'm leveraging all of the benefits that I learned from PLG. And I'm leveraging that product that's been through the ringer and that we know delivers value every single time, that is loved and retained and expanded, even without humans in the room. And I'm structuring very large deals. Those are the largest deals. They also display the best retention characteristics. And I want that in my motion. When that is not the only motion, but the one that's stacked on top, it is brilliant. If you notice, and it's kind of hard to see kind of visually, each of these three in the terminal year in this example are the exact same height. But PLG took a little bit longer to get there because we paid our dues and we put our product through the laboratory of refinement. And then we added inside sales, and then we added field sales, and we got a highly stackable business. So who's employed this strategy? Here's some names we know. We've been at this for almost 10 years. And how has the market responded? The first ones out of the gates, Dropbox and Zendesk, are over $10 billion. Atlassian was right behind them, and they've continued to add products, over $100 billion. Slack is a super famous story, and got to that $26 billion in kind of the shortest time ever to date. Zoom and DocuSign benefited from the future of work, but they built a product that works for individuals and small teams. And then when they brought in the enterprise teams, that was icing on the cake. Canva's still private, but valued at $40 billion. We know that this works. And if we're students of the world, we're going to do what works, and we're going to figure out how to build stackable revenue. So what does that mean for me? If I'm in sales and marketing, I want to work for a company that has built a solid base revenue layer. Not, if I hear things like, sales is in charge here and we get to do what we want to do, that's a bad thing. Even if you're a salesperson, run from that company. You actually want a solid base revenue layer where the product has been carrying the weight for some time, and now you get to come in and reap the benefits of that. You're going to hit your numbers, you're going to exceed your quotas, and you're going to love your life. If you're in product or engineering, you want to develop PLG skills. You want to be a member. You want your product to be a member of the revenue team, and you want to join a company where that is the philosophy. If you're an executive and you have the choice of A, fine-tune the product so it's extraordinarily easy to use. Let's say you just raised a bunch of money and maybe you're on to your Series A or your Series B. I'm going to fine-tune the product, or I'm going to build new features to meet growing customer expectations, or I'm going to scale the company by adding quota-carrying sales reps. If that's literally an option and A isn't already done, do A every single time. We feel so strongly about that even if you haven't raised the money to have the runway to do that, we would recommend restructuring the company so that you can make sure that A is right. You need the product working for you. And once it's working for you, those other sales motions are going to compound and deliver exponential growth. And if you're an investor, not all revenue is equal, and not all revenue growth is equal. A triple, double is not enough. I want revenue with the most stable base layer, revenue that's stackable. I want companies like this, companies that paid the price to get the product right, to send it through the laboratory of PLG, and then to layer on top of that growth engines that leverage that and deliver. I think we are in the most amazing time to build a recurring revenue business. I think everyone on this call has a reason to be on this call. We're interested in PLG. Huge thanks to Despina and the whole team at Product-Led Growth Hub and PLG Disrupt. Thank you, Breezy, for having me, and I would love to take any questions.
Awesome. Thanks, Dave. That was a great breakdown too. I thought the way you presented that was really clear. So I'm sure the rest of everybody tuning in right now is appreciative of that. And so, yeah, let's kick it off with some questions. So feel free to toss them in the chat, everybody, and we will address them as they come in. But I guess to sort of kick it off with a question that I have for you anyways from listening to your presentation is, there's so much change and excitement now around product-led growth, right? There's these companies who've been doing it for such a long time, but it seems like over the last, couple months, year, whatever that time frame is, there's this extra level of sort of excitement. I'm curious what your thoughts are on, where PLG is headed, and as more startups are launching with more of a product-led approach. Just like any sort of thoughts that you've had recently about that market and where it's headed.
Yeah, I agree with you. We've seen, PLG's been around even before we had the words strung together, product-led growth. We were talking about growth hacking, or we were talking about kind of the consumerization of B2B software. But now there's been enough studied and enough of these success stories studied that we're like, oh, this is a real thing. And I think investors are saying this is a real thing, and they're starting to recognize the patterns. So I think we're in the very early innings. We were talking about baseball before this call. I'll continue down that path. I think we're in the very early innings. I don't think we know how far it can go. A lot of people like to talk about the limits of PLG. Well, gosh, does it only apply to an application but not a platform? Does it only apply to technology but not non-technology? Does it only apply to small deals, not large deals? Does it only apply to whatever, Great. Yes. It's way easier to employ in all of those situations a small deal for an individual user that's an application, not a platform, and that's SaaS. Got it. But I think we haven't even scratched the surface there, and I think it's going to go for a very long time. If we can figure out how to get products to send signal back to us about how they're being used and how they're being succeeded with, why wouldn't we do that with sneakers? Why wouldn't we do that with t-shirts? Why wouldn't we do that with handbags, with cars, with e-bikes? We would. Product-led growth is it has a very long life, and we're in the very early innings. I think anyone on this call has a super bright future if we can figure out how to get products to do the work of acquiring, retaining, and helping customers be successful.
Yeah, it is really exciting in product-led growth, just because there's so much data available that you're able to truly make decisions based on, what people are doing in your product. When are they inviting more people in? Like, there's so much data for us to use that wasn't always accessible, that I think that's one of like the most exciting parts of it.
Amazing. We just have to get unsiloed. In the old world of thinking about it, the product's over here and the go-to-market engine is over there. But the data that you're talking about is being generated from the product, but it's relevant to the go-to-market. So we got to get those two teams together, and we got to get them together in a way that, we can communicate and work effectively, and sky's the limit, in my opinion.
Yeah, absolutely. One of the things you were talking about is the idea of bringing in sales. When is bringing in sales too early at a company? And I know you had a bit of a breakdown there, but do you think that there's any certain time frame that makes sense for a company to bring in sales once they kind of get that product-led motion going? Do you think there's a certain time frame, or what are some of those signals that a company should look for?
Yeah, and I'm less I'm less extreme than some of the kind of Silicon Valley entrepreneurs who like to brag about, we didn't have a single salesperson until $20 million. Fine, great. Good for you. Pat yourself on the back. I actually do think having some humans in the sales machine early on can be helpful. They just have to be the right humans. Like, what you don't want is to let your investor convince you that now is the time to bring the person in who scaled a SaaS business to $100 million. Those people are really good at running scale plays, but they are not good at what has to be done in the early innings when I'm trying to figure out product market fit and go to market fit. What I really want in the early days is a handful of people, and they're kind of a hybrid between a product manager and a salesperson. They're less interested in money, which sounds crazy when I'm talking about a salesperson, and they're more interested in discovering kind of the fit and getting it right. Some people have called that a Renaissance rep. But I would bring as soon as my founder selling has kind of reached its limits, I would bring a couple of, one or two of those people in, start using their networks to start selling deals, use their creativity to fine tune the product, get feedback back to kind of product management, have product management be monitoring the metrics that you're talking about and feeding that in back into the field sales team or to the sales team so they know it's working. And I'll just run this play until I get it right. And then it's the inside sales as a machine that I'm going to add later once I have that right. And that could be at 2 million, 5 million, 10 million. It depends on your business.
Got it. So one question we just got on the side is, how do you justify field sales expense if PLG is designed to reduce these costs? Should sales be expected to be greater with inside sales eventually? What's your answer there?
Yeah, it's a great question. And anyone who's, in a financial planning and analysis function has asked that question over and over again, because field sales is expensive. It's really expensive. These salespeople have, $200,000-$300,000 on plan, earnings plans, comp plans. Now, they do bring in big deals. But the question is, could I bring in, more deals that are smaller and do that cheaper? Yeah. So it's a balance. I do think over time, our sales professionals' jobs are going to morph, and we're going to be more coaches and concierges than we are going to be kind of pure salespeople. We're going to be helping our customers get value out of the product versus helping them buy the product, because the product's going to sell itself, and the ability to order more of the product is going to happen in a portal, and the ability to deploy a product is going to get easier and easier. So, we're not necessarily a critical path unless we have value to add on top of it, which is, coaching and concierge type selling. And I think not all salespeople are going to make that leap, but the ones who do are worth it. I'd pay $300,000 for a salesperson that can help my biggest customers be successful and move forward in a rational way and in a sustainable way on my product. And I can't ever expect my product to sell a biggest customer and help a biggest customer succeed without any intervention. So there is a balance. I do think we have to watch that. And I think the balance is shifting.
Yeah. Yeah. I think you're hitting it spot on too. I mean, I talked to so many different teams at product-led companies about this convergence of the sales and the customer success roles. And it's not that they're becoming the same role, but sales is gaining some of those CS skills, like you're saying. And CS in some scenarios is gaining some of the sales skills. But I think all around, everyone's just getting better at understanding the product and what it does and becoming more of a product expert. So really interesting insights there. One other question that we got on the side here is, would you say that hiring CSM should be prioritized over sales at product-led companies?
It's a really good question. So one thing I can say for sure is that you want to prioritize retention over new customers early on. Like when you're trying to figure out product market fit, the fact that you could sell another customer and then another customer and then another customer is irrelevant. Whether or not you can retain that customer, like whether or not that customer is getting value out of your product and that customer is succeeding and expanding based on that impact, that is the most important thing early on. So yeah, I would say on balance, to directly answer the question, yes. With one caveat, everything that I'm learning on the front lines from my CS team, I want to program into the product. Like, I don't want to just scale humans to go, Band-Aid my product that's not easy to use. I've seen that model before too. I do want humans throwing themselves in harm's way, learning what's working and what's not working, and giving feedback back to the product team. And that's probably more important than winning the next contract.
Yeah, that's a great add in there too. And the question that's sort of related to that is, how do you also get customers to give valuable feedback in order to build that exceptional product?
Yeah. Well, a lot of the companies that I work with are struggling with that. The first step down that journey is to get the product team to consider themselves part of the revenue team. And that's just a mental shift. Like, the old way was ship and forget. Oh, we shipped, great, check. Now I'm going to move on to my next thing. But the new way is ship and learn. Like, I don't actually get to start learning until the product's in the wild. Well, who am I learning from? A bunch of things. One is I'm learning from the data, which engineers are generally pretty comfortable with. But the other is I'm going to learn from my CS team or my customers. I'm going to observe them using my product and getting confused by something that I thought was really clear, but clearly is confusing customers. So I actually I have multiple sources of learning. Once I consider myself part of the revenue team, I'm going to be greedy about that information, and hopefully I won't turn my nose up to the source of it. I want it from data. I want it from CS team. I want it from customers. I want it from anywhere I can get, because I'm now in learning mode. It's my product out in the wild.
Awesome. Yeah, that makes a ton of sense. All the different ways that we can get data and sort of tying all those pieces together. Well, I know we are just at time right now. So Dave, really appreciate you coming on. Great session, and looking forward to having the replay available for everyone as well. So
Awesome.
Thank you again.
Everybody go be amazing.
Bye. Have a good one.
Bye.